market is getting crushed, led by technology. We haven't seen selling in technology like this since the spring of 2014, if I recall. Let's just go back. I'll just quickly show that to you. This was the one-day crash in 2015. But the last bloodbath like this in technology happened, I think it was April or May 2014. I guess this was it right here. So I guess it started right here, like the end of March. We were here on the Qs, we're at 90. We came off to like 86. We popped back up to almost 90. And then we got crushed. We had this huge down day here, and then another huge red day. And there was just capitulation where after the red day, we gapped down, put in a low, had a bounce, and that was kind of the beginning of us moving back up. But stocks were down 30 to 50%, technology stocks, similar to right now. Here's what the Qs look like. Closed at the low yesterday, gapping below the October low where we had the big bounce from a few weeks ago. And so there's just indiscriminate selling right now. And so I put levels on the sheet, kind of like, Apple 178. Where's Apple? I mean, looking at the daily last night, I thought even in the mid 170s it could go to. On a morning like this, where there's just total fear and everyone's hitting the sell button and wants to get out, you could put in like crazy lows right on the open, the first 30 minutes or hour, where it's just like pull the rug, puts in a low print, quickly, a couple of dollars, few dollars higher, and then we kind of see what happens from there. But you have the elements. You have indiscriminate selling across all of technology, and I put a bunch of the names on there that have been crushed. And that's kind of what I'm going to look at. Be very careful until we kind of see that that capitulation in the first big up wave, and then see if things start to stabilize. But if it happens right on the open, we have the whole day to kind of go from there. Let's take a look at the SPYs. So the SPYs 30-minute. Okay, so we bounced a few days ago from 67.5. We got back up to the 74, 75 area. We were there 2 days ago. And we are now down $9 since Friday's high on the SPYs, which is a lot. It gets really messy in this area here where we bottomed in October. You can kind of see 262 was the level I'd been targeting there. That intraday moved down to 260. We closed right back above 262, and then that was it. We're getting close to 262 now. Seems like a stretch for us to get there today, but maybe a flush in the open gets us to here. Somewhere in this area right here. The SPYs were holding up okay yesterday. I mean, after we flushed down, we did bounce to 270, and this is, this tech was getting crushed. Playing a little bit of catch up now. I think the way I look at this is I want to see what the first move looks like. First move down, flush through 265 would be good, I think, in terms of being able to catch a little quick pop back. I wouldn't become more constructive on the market than a quick bounce unless we got back above last week's low, which is right here. And then if we started to consolidate in this area here, then I'd look to see if we could catch a bid and then move back up to 270. So that's on the SPY side. On the Q side, we went over that a little bit bigger picture. Yesterday, it came off from 67 to 62. It was a big move. And we're gapping down another $3 this morning. So if they wanted to do something like crazy, like if they just hit all the technology stocks on the open, that they all flush to lows, I think another $2 to $3 from right here on the Qs. In fact, if I saw a handle, what do I have here, 56 to 57? Once we got to 57, I would start to do some option stuff. Probably buy like some 165 calls, sell some 154s, something like that. And then if we don't get that just massive flush, and we just kind of bounce, I want to watch, see what happens if we, do we fail at 160? Do we start to hold above 160? Start to hold above 160? The gap fill. Again, technology is the most oversold. So you could even, I don't know how likely it is for a gap fill, but it's a possibility. The first thing you would have to see is us holding back above 160. And then VXX, so the actual VIX itself is well below the October lows. Right now it is 22.5. We topped out just under 28 in October. Looking at this, I think, what do I put on the sheet? Yeah, 41 kind of coincides. If the actual VIX pops on the open to a kind of the next closest resistance area, this probably could go to 41. It is interesting that the VIX is much, much lower than where it was. And coincidentally, it kind of coincides with some resistance. It's just a coincidence, really, where it was a few weeks ago, but 41. But 41 coincides when I check the actual VIX, the next kind of resistance area, 6% above where it is. This pops 6% into here, into 41. Then if VIX starts to sell off from there, holding below 40 would be interesting as well. Obviously, when the market bounces, SPY catches a bid. Let's say SPY catches a bid into 265 or 264.5, and then starts to hold above 265. The actual VXX would be an interesting short play. So that is that. Coles reported. I just want to put one thing on here, even though we're going to be busy with market plays. The numbers looked okay. If we go back to 2 quarters ago when they reported, it had gapped up to 69 and they hit it hard. They ended up bottoming at 60. This was one of those things where we've been seeing in retail for the last couple of years where the numbers look okay. It got crushed, and people calmed down a few days later and it went to much higher prices. So obviously market environment not great right now compared to early May when we were bottoming and bouncing, but this does seem overdone, and if they panicked it down closer to $60, I would think people would be looking to buy it. So now it's like, $1.50 from there. And on the pop side, put 64 resistance, but it's really, it's a 64, 65. So 1.5 ATRs would be like year to year. NVIDIA. So NVIDIA was 168 the day they reported and gap down. That was kind of where it failed, between 168 and 170. It is now down about 20-something% in 2 days after the gap down, not even including the gap. And the scary thing is it's kind of, you got to go back to, it's about 18 months ago. It broke out from this 24, 25 area. And above that, the pullback it's below that now. So we'd really have to retake this 138 to 140. I put 140 as the first resistance on the sheet. Basically, it would have to get back above 140 to look for a more sustained bounce into this area. It is also down 50% from the high from a couple months ago. There definitely was some bad news there, but it seems like this is capitulation to me. So here was the reaction after earnings. It popped up to the after hours resistance, sold there yesterday, the selling accelerated, and then this morning you've got the gap down. So maybe it has a little bit more downside. I just don't see it. Anything's possible, but I just don't see in the near term it getting down to that gap area where it broke out from, which is $10 below here. If it did get there, you definitely the risk reward would, be at least 10 to 1. But more likely scenario is a flush down closer into the 130-ish, 130, somewhere basically $2 to $4 below where it is right now. It's a big thing to work with. Let's got $15 ATR. Maybe we'll get there. I'd be very careful on the shorts though below 130 because look at the size of this move. This is just the intraday move from yesterday. The gap down was from 200, obviously. It's a 30%, 32, 33% move from here to here. It will be dangerous, but a flush into 130 is interesting to me. Facebook way oversold. I think as a longer term buy in these levels below 130, it's pretty good. From a short term perspective, so we got to go back to what was 2016, 2000. Another 18 months ago was here, so it's erased that. Erased this entire move from here to here. So we've got to go all the way back to late 2016, early 2017, when it broke out from, this is like, I guess, 123 to 125. It hung out here. It's within striking distance. And that's almost 2 years of up a race in Facebook. This is from a longer term perspective and a safety perspective. This is, I would put this right at the top of my list into here. And as it gets down, if it gets down to 125, I will buy next Friday's probably 34 ball, something like that. They should be cheap. Maybe sell the 142s against it. To cover some of the costs of the trade. So just like looking even at 8, so at 8 a.m. we were at 129. It's just selling. And people are looking for, you get something on the open, something kind of like this bar right here. It's like that final bar and then a pop. It's a $5 ATR. So let's say it flushes on the open to 125. It actually has a bounce. You're looking at a bounce back up to at least to here. You kind of see. A lot of times, like on days like this, although it feels like capitulations, things are oversold. When you do catch the big, capitulation on the open and you make some money in that first 20 to 45 minutes or whatever it is, you do want to take off. If you don't take off everything, take off at least 80%. Wait for things to set up again. If things stabilize and hold, at higher prices from the open, then you can always reload. You just want to guard against the quick ATR move and then like almost a full retracement. So that's another thing. Let's take a look at Apple. So Apple, when I was looking at it last night, the mid 170s, I think I might have already said this, was looking kind of interesting. It's almost there in the pre-market. What do I have on the sheet? 170, and it's almost at my kind of S2 from starting to look at it in the 181 in the pre-market. So I'm going to use that for the open. It flushes down into the 178, see how much it goes through it. Does it ever get back above it? It seems like people are already starting to buy it here into 178. Some good volume. What's the volume here? One already done 1.4 million shares. On resistance, I have on this one nothing till 82, 84. And that's where it was a couple of hours ago. It came into 82, it got below, and then had another leg. Tried to bounce, then had another leg. Yeah, it's just so severely oversold short term. And another one in the safer area, I think, in terms of, they're buying back the shares, all the Buffett and the acolytes, they'll buy more shares into the weakness. Buffett's still up 100% from where he originally got in. And just psychologically, I think this 180 is interesting. Yeah, when I was looking at it last night, it was this gap. What is this? That was the May earnings, where it gapped to 178. And then below that, you know, it had the gap right here into 174. So it's an interesting, yeah, it's 174 to 178 is pretty interesting. And then Adobe. So when I looked at Adobe last night, I thought 210 was interesting. If things got really hairy, maybe it would flush closer to 200. It's already 207 in the pre-market, so here was 210, and then it's like 204. It's right here. Looks like it's going to flush maybe into this on the open. I think buying maybe the 230s a month out, if it flushes below 205 on the open, is kind of an interesting on the call side. Selling, I would even say selling the 195 puts would be interesting there. You'd probably be pretty juiced. So might even be able to get like $6 for them. Effectively be long below 190 here. That is that. Look, there's a lot going on. This is dangerous. Obviously, trade small. Things are going to be crazy right on the open. And if a bunch of things start to catch pulled bids and have pretty good pops, and that the pullbacks are higher lows, and things kind of start to consolidate into tight areas where you can nibble with defined risk, that's what you should do. Fear generally creates good short-term bounce opportunities. It doesn't necessarily put in the low. You know, we could be, by the end of the year, we could test lower prices, but in the short run, when you see this type of fear, probability is in some type of up move. The question is, if you don't get that first wave, can you responsibly, you know, try to find a way to get in to catch a second or third wave, whereas you're not chasing. As I described that situation where we capitulate on the open and we do this, and then if you're chasing up here, and then we get that, then what do? You know? So as always, be patient and good luck.